Did you know the money in your bank account is not really yours? A startling thought, isn't it? But it's a concept well worth understanding. When you deposit money into a bank, a subtle yet significant shift occurs. That crisp bundle of notes or that digital figure isn't really yours anymore. It becomes the property of the bank. In exchange, the bank makes a promise to return the same amount, perhaps even with a little extra in the form of interest. It's much like leaving your coat at a cloakroom. You hand it over, they give you a ticket, and when you return with that ticket, they give you back a coat. It might not be the exact same coat you handed over, but it's a coat nonetheless. And to most, that's all that matters. Now just imagine what happens if everyone at a party suddenly decides to leave at the same time and they all rush to the cloakroom for their coats. Chaos, right? The same principle applies to banks. If all depositors decide to withdraw their money at the same time, it could cause a bank run. The bank might not have enough cash on hand to return everyone's money. Sounds scary, right? Here's the catch. Banks are not required to hold the full amount of cash that is deposited. Since the financial crisis of 2008, regulations have become stricter, requiring banks to maintain a certain level of cash to withstand such bank runs. This measure, known as the Liquidity Coverage Ratio, or LCR, gauges a bank's ability to endure an outflow of cash. For instance, Silicon Valley Bank once had a low LCR score of about 70%. It's always a good idea to check the LCR of the bank where you keep your money. But there's more. A bank can also freeze or seize your funds based on local laws and anti-money laundering processes. It's a complex system, but understanding it is crucial. So to recap, when you deposit money into a bank, it becomes the bank's property. Banks are not required to hold the full amount of cash that is deposited. They must, however, maintain a certain level of liquidity to withstand potential bank runs. And your funds can be frozen or seized under certain circumstances. As sobering as this might sound, it underscores the importance of understanding how banks handle deposited money. It's your hard-earned money after all. So, the next time you see that balance in your bank account, remember this: it's more than just a number. It's a promise, a responsibility, and a key piece of the larger financial puzzle. Did you know that banks only keep 10% of the money you deposit and lend out the rest to make huge profits? In future videos, we will cover this and much more. Thanks for watching. Like, comment, and subscribe for more videos like this.